Hello, welcome back to the Note and a happy May Day to our British viewers. Now, the correction in bond yields continues apace, particularly in Europe. German 10-year bond yields have gone up more than 40 basis points in just 2 weeks, which by the scale of those things is a very dramatic move. Here in the States, the S&P 500 was on course to close at a record high. At one point it missed out on that, but it still is at an extremely elevated level. The main reason for that is earnings season. We were braced, obviously, for extremely bad earnings this quarter, and while the earnings are still not at all good, they are better than expected, and they are indeed positive. Having at one point been braced for outright declines, we are now on course, according to Thomson Reuters, for a gain of 2% overall in earnings. That's more of a positive surprise than you normally get from this exercise, and it's plainly good news. Against that, we are still on course for outright decline in revenue for the S&P, and that's not just energy, which is obviously affected by the oil price. 4 of the 10 S&P sectors are on course to see revenues decline, and a majority of S&P companies have failed to beat expectations when it comes to their revenues. So this is plainly still a sign that there is a certain lack of momentum and impetus in the underlying economy. Now, add to that, we have had today, as it's the beginning of the month, a range of supply manager data, ISM surveys from around the world, usually a very good indicator of economic growth. And as we can show you here, particularly in Asia, outside of Japan, they show rather a worrying trend. All the main economies of that region are now below the level of 50, which demarcates the gap between growth and recession. Now, that's not unusual. Across the world, over the last 3 months, there are only 4 countries that are showing an actual increase in their ISM numbers, and all of those are in Europe, which obviously starts from a low base. So while it's obviously encouraging to hear from chief financial officers that earnings are increasing, the revenue numbers from companies and also what supply managers are saying suggests that this is still not an environment to be wildly excited about growth.